Trend reversals don't have to be laggy and wait eons before letting you know that the market is changing direction. Take a look at this. Here we had a steady bullish trend, and then the market skyrocketed to the upside and became overextended. A few candles later, the price started pulling back and closed back inside the upper band of this indicator. Immediately when that happened, the indicator told us that the trend of the market could be reversing to the downside. If we were to take a short position here, you can see the trade would have been profitable because the price did indeed go down afterward. Now, take a look at the opposite example. Here we had a steady bearish trend, and then the market rushed to the downside and became overextended. A few candles later, the price started pulling back and closed inside the lower band. Immediately after that happened, the indicator told us that the market could reverse. If we were to take a long position here, you can see that that trade would have been profitable. Ladies and gentlemen, in this video we're going to go over what this indicator is, the best settings to use, and we'll also show you a super profitable yet simple trading strategy that you can use to trade with it. If you found value in this video, remember to leave a like. Let's get into it. So to follow along, I'm going to use TradingView, which is the trading platform that we've always recommended using when testing out strategies. If you haven't signed up yet and you want to use the same setup I'm using, there's going to be a link in the video description for you to sign up. Once you've done that, you want to open the 15-minute time frame of GBP/JPY, but remember, this strategy can actually work on any trading security and on any time frame. After that, click on indicators and type in liquid reversal bands, and you want to select this one by uptrick. Once added, this is how it's gonna look. Now, I know you may be thinking, but what exactly is this indicator? Well, ladies and gentlemen, this is the liquid reversal bands indicator by uptrick. It's designed to identify trend reversals with almost zero lag using adaptive envelopes. You know, these upper and lower bands, which are powered by 4 volatility sources. It triggers signals that tell you when the price is about to reverse to the downside after an uptrend or to reverse to the upside after a downtrend. Now, to ensure that these signals are reliable, the system uses a close crossing logic, which means it only triggers once the price confirms a return into the envelope rather than just touching a band. Now, let's go over the components. The first component is the line running through the middle of the indicator. This is called the liquid fair value line. You can think of this as the indicator's estimate of the market's current fair value. When the price is close to this line, it's trading near its recent average, but when the price moves far above or below it, then the market may be becoming overextended. The liquid fair value line is created by combining 2 types of moving averages, an EMA and an ALMA. The EMA gives the line smooth and stable movement, while the ALMA helps reduce some of the delay that normal moving averages usually have. The result is a centerline that aims to respond to real trend changes without reacting too strongly to every single little spike. You'll also notice that the fair value line changes color. Its color is based on the direction and the strength of the trend. When the line is rising, it changes toward its bullish color. When it's falling, it changes toward its bearish color. A stronger color means the slope is more clearly moving in that direction. When the line becomes less intense and starts changing color, the current trend may be losing strength. The next components are the primary upper and lower bands. These create the main envelope around the fair value line. The upper band can act as dynamic resistance, while the lower band can act as dynamic support. However, these are not fixed levels. They expand and contract as the market's volatility changes. During high volatility, the bands move further away from the center line, but during quieter conditions, they become narrower and narrower. This stops the indicator from treating normal movement during a volatile session as extreme. What makes these bands different from any other channel indicators is that their width is not based on only one measurement. This script combines 4 different volatility readings. These include the standard deviation of price from fair value, the ATR, the average absolute deviation, and the average energy of each candle's range. These 4 measurements are blended and smoothed into one band width. Because of that, the bands can respond to different types of volatility conditions without suddenly expanding just because of one unusual candle. You may also see a second set of bands outside the main envelope. These are called the outer bands. The outer bands identify more extreme price extensions. Reaching a primary band means the price is stretched, but reaching or moving beyond an outer band tells us that the move is even further away from fair value. These outer bands can be useful for finding stronger mean reversion setups. The next visual component is the candle coloring. The indicator offers 2 different color modes. The first is called reversal heat. In this mode, the candle colors change based on where price is positioned inside the complete band range. The second option is called latest signal. So, instead of changing with price's live position, this mode colors every candle according to the most recent confirmed reversal signal. After a buy signal, the candles remain in the bullish color until a sell signal appears. At the same time, after a sell signal, they stay in the bearish color until the next buy signal appears. This creates a persistent signal buyers and may be easier for traders who want a simpler chart. Now, let's take a look at the buy and sell signals. A signal does not appear simply because price touches or moves through a band. No, the indicator waits for a confirmed close outside the band and then another candle closing back inside it. For a buy signal, price first closes below the lower band, a later candle then closes back above that lower band and re-enters the envelope. For a sell signal, price first closes above the upper band and then a later candle closes back below it and returns inside the envelope. This close crossing logic helps filter temporary wicks. Price has to show that it was genuinely outside the band and then confirm that it has indeed returned inside the band before the signal can be printed. Next, we're gonna go over the settings of this indicator and see how customizable it can be. And then after that, we will go over how we can use it to trade. But before we do that, I wanna quickly talk about Hola Prime, a prop firm I've been using recently. One of the things that stands out is how quickly they process payouts. Hola Prime offers 1-hour payouts, and their published figures show an average payout time of 33 minutes. Their payout system has also been independently reviewed by Deloitte, which helps validate the reliability and transparency of the process. They also promote a zero payout denial policy for traders who follow the rules. Another thing I like is the amount of choice they provide. Hola Prime supports MC4, MC5, CTrader, MatchTrader, DXTrade, and TradeLocker, so you can select the platform that best fits your trading strategy. They also offer Forex programs including 1-step and 2-step challenges, plus direct accounts and separate options for futures traders. Depending on the plan and payout cycle that you choose, payout splits can reach up to 95%. They also have a scaling plan that allows consistent traders to grow their account allocation up to $4 million after meeting the required performance conditions. Every plan has its own trading and payout rules, so make sure you review the drawdown limits, risk requirements, and payout conditions before purchasing. If you'd like to try Hola Prime, use my affiliate link in the description, and at checkout, enter my discount code PINE to receive 20% off your challenge fee. Using the link and code also helps support the Pine Trades channel at no extra cost to you. Now, let's get back to the video. Let's open the indicator settings. The first setting is the source. This determines which price value is used in the calculations. The default is the closing price, and I'm gonna leave it there. Next, we have fair value length. This controls the lookback used for the EMA and ALMA that create the liquid fair value centerline. A smaller value makes the centerline react faster to price changes. A larger value creates a smoother and slower line that focuses on the broader trend. Next, we have the Z-width lookback. This determines how much historical data is used when calculating the deviation-based parts of the band width. Increasing this value makes the bands more stable because the indicator is comparing current volatility with a larger amount of history. However, it also means the bands will respond more slowly when market conditions suddenly change. Reducing it makes the bands adjust faster. The next option is band smoothness. This controls the final smoothing applied to the combined bandwidth. A higher value makes the bands smoother and more stable. A lower value makes them react faster to changes in volatility. Next, we have the upper band multiplier and the lower band multiplier. These control how far the primary bands are placed from the liquid fair value line. Increasing it moves the band further away. Reducing it brings the band closer to fair value. Under that, we have the outer upper band multiplier and the outer lower band multiplier. These settings control the distance of the optional outer bands. These settings only affect the chart when the Show Outer Bands option is enabled. So let's enable that down here. And then we have Candle Coloring Mode. I'm gonna leave that as it is. The Show Signals toggle controls whether the buy and sell labels are displayed on the chart. Next is Signal Cooldown. This sets the minimum number of candles that must pass between signals. Increasing the cooldown helps reduce repeated signals during sideways or choppy market conditions. Setting it to 0 allows a signal on every candle that meets the rules. Let's change this to 20. The Show Outer Bands toggle displays or hides the extreme extension bands. We're gonna leave this enabled. Next is Slope Smoothing Length. This controls how much the slope of the liquid fair value line is smoothed before its color changes. A lower value makes the color respond faster when the line changes direction. A higher value makes the color more stable but slower to react. The final input is Slope Color Sensitivity. This determines how quickly the fair value line reaches its strongest bullish or bearish color. I'm gonna leave both slope settings at their default values. Once you've finished with the settings, click OK so we can go over how to trade with this indicator. Now, for this strategy, we're gonna add another indicator to help us identify divergences. On the Indicator Search tab, type in RSI Divergence Indicator and select this one. Once added, you'll see it prints instances on the market where you have bullish and bearish divergences. A bullish divergence is when an indicator like the RSI creates higher lows while the price is creating lower lows, like here. A bearish divergence is the opposite. The RSI oscillator is creating lower highs while the price is creating higher highs, like here. Now, how do we take a long position? Condition number 1 is that the price should be overextended to the downside, so much so that a candle opens and closes completely outside the lower outer band, which is this one right here. Condition number 2 is to wait for the price to start moving back up until a candle closes inside the lower inner band, which is this one. To confirm that a candle has closed back inside the band, the indicator will print an up signal on that candle. Once you have the up signal, look at the chart manually to identify a bullish divergence has happened between price and the RSI. In this example, you can see this is our bullish divergence. The divergence should form before the signal appears. It can form 1 candle earlier, 2 candles earlier, or up to a maximum of 3 candles before the up signal. Once all the conditions are met, we take a long position. Place your stop loss below the most recent swing low. For the take profit, you can target 1.5 times the risk, or you can use the upper inner band, which is this one right here, as your target. Letting the trade run, and as you can see, ladies and gentlemen, the trade would have been profitable. Now, for a short position, we do the opposite. Condition number 1 is that price should be overextended to the upside, so much so that a candle opens and closes completely outside the upper outer band, which is this one right here. Condition number 2 is to wait for the price to start moving back down until a candle closes inside the upper inner band, which is this one. To confirm that, the indicator will print a down signal on that candle. Once you have the down signal, look at the chart manually and identify a bearish divergence between price and the RSI. As you can see here, this is our bearish divergence. The divergence should form before the down signal appears. It can form 1 candle earlier, 2 candles earlier, or up to a maximum of 3 candles before the down signal. Once all the conditions are met, you take a short position. Place your stop loss above the most recent swing high. For the take profit, you can target 1.5 times the risk, or you can even use the lower inner band, which is this one, as your target. Letting the trade run. And as you can see, the trade would have been profitable. Ladies and gentlemen, this is not financial advice. Everything in this video is for educational purposes only. Test the indicator on your selected market and time frame and use proper risk management, and never assume that a reversal signal guarantees the market will turn. If you found value in this video, remember to leave a like. And if you want to see more indicator breakdowns just like this one, consider subscribing to stay tuned. Thanks for watching. See you next time.